The cursor floats over the entry button and doesn't move. Candlesticks are printing exactly the way you asked for on the 5-minute. Higher low into VBUP, narrow range, volume drying into resistance, with the 1-hour trend aligned above a rising 20-period moving average. Order flow hints at quiet absorption, level 2 shows the spread tightening, and your stop loss is mapped to the wick that actually breaks structure, not your feelings. The playbook says click, your alert just fired, and you freeze. You tell yourself you just want one more candle, one more delta push, one more confirmation from someone in chat. The pullback you were waiting for tags your entry by a hair, then launches without you. You shrink in your chair, watching a setup you named perfect run away. A few minutes later, you chase the breakout, get the worst fill of the sequence, and the same market that would have rewarded the systematic click now taxes your hesitation. If this is you, you're not broken. You're a trader with a nervous system doing exactly what it evolved to do. Avoid pain at the moment. Pain is most likely right when you press the button. Here's the trap. Calling a setup perfect is a psychological move, not a trading edge. In Trading in the Zone, Mark Douglas hammers that the market offers only probabilities, and that certainty is a feeling your mind invents to soothe discomfort. The moment you label a pattern perfect, you raise the emotional stakes, and your brain starts protecting your identity instead of your risk. You slip into micro delays that masquerade as prudence. I'll wait for a close above. I'll see if the RSI confirms on the next candle. I want the spread one tick tighter. Those micro delays are how fear hides inside analysis. The disciplined trader drills this point further. When beliefs about how price should behave collide with randomness, you will either hesitate or force. Both are expensive. Under the hood, your body is running a chemical script. Green unrealized P&L promises a dopamine hit. The first red ticks threaten a cortisol spike. As you hover over buy, your brain previews both outcomes and chooses a third option, stalling to dodge the cortisol. Add adrenaline during volatility and serotonin depletion after recent losses, and your risk tolerance shrinks right when your plan needs decisive execution. The psychology of trading explains how state management, not IQ, separates performance days from tilt days. When you freeze, you're not missing knowledge, you're missing state control. Trading Psychology 2.0 widens the lens. Social proof from streams and forums amplify mirror neuron copying, so you borrow conviction from strangers and then hesitate when it doesn't feel like yours. You crowdsource courage, then can't execute when the crowd goes silent. The paradoxes of trading sharpen the blade. The best trades often feel the worst to click. Tighter stops frequently lead to bigger losses because you get wicked out at the exact invalidation cluster everyone shares. More analysis can create worse results by layering expectations that the market does not respect. And the perfect setup visible to every algo and every trader invites gamesmanship, shallow fakes, stop runs, and hesitation traps. Market Wizards is full of stories where great traders made their money by taking good bets repeatedly, not by waiting for a mystical alignment that removes doubt. Past patterns don't guarantee the future. Most traders lose money. This is not financial advice. Risk management is survival. Let's get concrete about the costly pattern that hesitation creates. You map the daily higher-low structure and define a 5-minute pullback into the prior day's high with VWAP support. Your trigger is a break and hold above the micro flag. Your stop loss is 2 ticks beneath the wick that forms the flag's base. Your target is the next low-volume node on the profile for a 1 to 3 risk or reward. The alert fires. You say you'll enter on the break, but the first tick looks weak. You wait for a close. The close is strong, too strong. You tell yourself you don't chase. You wait for a retest. The retest comes 2 ticks above your planned entry and never touches it. You finally click as price skirts the prior high. Your stop is now mid-structure. Your position size is distorted and the risk or reward collapsed. A normal backfill tags your stop. You re-enter higher with worse location because you know the move is real. Another backfill takes you out again. You either widen the stop, breaking your rules, or revenge trade smaller patterns, breaking your selectivity. At day's end, your read was fine. Your execution was not. You didn't miss because the setup failed. You missed because you required perfection to banish doubt. And the market taxes perfection. Meet Marcus, the system trader. He used to be the guy above. Now he sits in front of 3 monitors, daily and hourly context on the left, 5 and 1 minute execution center screen, order flow, level 2, and P&L hidden unless summoned on the right. He routes through interactive brokers, charts in TradingView, uses alerts like tripwires, and plots volume profile, a 20 and 50 moving average, RSI divergence for confluence not permission. He built his process after reading The Way to Trade and internalizing one sentence, the system is the edge. Marcus doesn't ask, do I feel ready? He asks, did the system signal? If yes, the click is automatic. If no, the idea is dismissed without drama. Marcus journals like a scientist. From Trading in the Zone and The Disciplined Trader, he stole probability thinking and belief audits. From The Psychology of Trading, he stole performance routines. From Trading Psychology 2.0, he stole quantified review. From Market Wizards, he borrowed humility. He catalogued playbook pages for each setup, context, trigger, stop location that invalidates structure, initial target, add criteria, scratch rules, time stop. He measures in batches of 20 trades. Nothing is good or bad until the sample closes. He treats each entry as purchasing information. If the stop hits, he paid tuition for data. If the target hits, he rented exposure intelligently. Either way, the next trade is independent. His morning is boring by design. He marks prior day high or low, overnight high or low, gaps, the value area, and obvious liquidity pools. He defines 3 setups maximum. He writes a one-line hypothesis. If price accepts above yesterday's high and holds VWAP on pullbacks, I will execute the flag break with stop beneath base. He rehearses the first 30 seconds after entry going red. He breathes in a 4-6 rhythm and imagines doing nothing. He rehearses the fake break and the scratch. He rehearses seeing chat scream the opposite and sticking to the checklist. He primes his nervous system to meet stress without bargaining. Then he loads his execution toolkit. Bracket orders set the instant he clicks, stop at structural invalidation, take profit staged at 1 hour and key levels, a runner trailed by structure, not hope. A 2-minute rule. If the alert fires and all checklist items are green, he must enter within 2 minutes, or the trade expires for him, no chasing the same idea. A 3 strikes protocol. 3 consecutive rule-following losses cut his size in half. A sleep filter. Under 6 hours of sleep halves size and narrow selectivity. A maximum screens rule. He forbids adding time frames during a trade. If it's a 5-minute setup, he cannot peak at 15 seconds to scare himself out. A social blackout. No streams, no Twitter, no Discord while in a position. On a recent NQ Futures session, a gap and go into prior supply set up his favourite continuation. The perfect feeling flickered. Green candles, influencers chirping. That sensation is his alarm. The Way to Trade taught him that feelings are noise unless encoded into rules. His alert pinged. He clicked. His stop slid under the flag base. His risk unit was fixed by account risk, not conviction. The first ticks dipped. He did nothing. The move extended. He scaled at 1R, then at prior high, and let the runner trail under higher lows. He didn't add just because it felt strong. He added only at a predefined add zone after a consolidation because that's in the page. He closed the runner at a time stop. The trade was unremarkable. That's the point. System trades look dull and feel slightly uncomfortable. That slight discomfort is what tells him he isn't chasing reassurance. Rewiring a freeze response is not motivational, it's mechanical. First, redefine the meaning of entry. Marcus uses Douglas's probability frame. The click does not mean I am right, it means I have paid to find out. Second, rely on belief alignment. The disciplined trader asks you to surface the hidden beliefs that drive hesitation. I must avoid pain. I need confirmation. A perfect setup must not fail. Marcus rewrote them. Pain measured is acceptable. Confirmation is expensive. Perfect is a feeling, not a filter. Third, train your state. The psychology of trading suggests pairing execution with rituals, deliberate breath, micro-visualization, and pre-commitment language. Marcus whispers the same words before every click. defined risk, defined outcome. Fourth, make social proof irrelevant. Trading psychology. 2.0 advocates performance metrics that live inside your process, not someone else's feed. On-time entries, rule adherence, location quality, and post-trade self-talk scores. Fifth, encode paradoxes into rules. Because tighter stops can cause bigger losses, his stop sits where structure truly breaks, not where it feels safe. Because more analysis can cause worse execution, he caps prep time and number of charts. Because the best trades often feel worst, he labels discomfort as neutral information. Sixth, automate courage. If the alert fires and the checklist is green, the mouse click is not a judgment. It's a pre-decided motor action. Seventh, shrink the cost of being wrong. Smaller risk per trade makes it physiologically easier to click. Your cortisol spike is proportional to perceived threat. Eighth, journal like an athlete. He tags entries. On time, early, late, missed, and reviews screenshots nightly. He doesn't judge outcomes, he judges behaviors. Ninth, place friction where you fail. He hides real-time P&L because dopamine or cortisol sees it as a slot machine. He requires a written reason to move a stop. If he can't write it in one sentence that references structure, he cannot touch it. 10th, schedule quitting. Done for day triggers at plan, not at euphoria or despair. Most traders lose money. Past patterns don't guarantee future results. This is not financial advice. Risk management is survival. But you can bend the odds by removing permission from your feelings and granting it to your rules. If you're a discretionary trader, steal from systems. If you're a systems trader, steal from performance psychology. If you're both, marry them. The books all converge here. Trading in the Zone says think in probabilities. The disciplined trader says align beliefs with reality. The Psychology of Trading says train your state. Trading Psychology 2.0 says measure what matters. The Way to Trade says execute the system. Market Wizard says size risk so you can survive long enough for edge to matter. Picture your very next session. You've pre-marked levels and written 3 one-line hypotheses. You've rehearsed the first red ticks without bargaining. Your 2-minute rule is armed. The alert pings at your level. You feel that old squeeze in your chest and watch your mind pitch the old script. Wait for perfect. You answer with a smaller, calmer voice that is now louder than fear because you built it on purpose. Defined risk. Defined outcome. You click. Bracket orders drop in. The first tick is red. Nothing to do. The second tick is red. Nothing to do. The third tick wicks and flips. You don't add, you don't flinch, you let the system print the trade. It might stop. It might run. You won't know until it ends and you no longer require knowing to act. A week from now, your journal shows fewer missed and late, more on time. Your average loss shrinks because your location improves. Your winners don't look spectacular. Your equity curve looks smoother. You still have losing days. They don't spiral because you halved size after 3 rule-following losses. You still feel fear. You built handles to hold it. You no longer wait for perfect setups to remove doubt. You accept that doubt is the cost of entry, and that the system, not reassurance, earns your click. And when someone in chat posts a gorgeous hindsight screenshot and asks, "Wasn't that perfect?" you smile, mark your next level, and get ready to do the most unglamorous professional thing in trading. Execute your next defined risk exactly when your alert tells you to.